Hey folks, welcome back. Hope you're having a wonderful time out there. I have been having an incredible last 2 days in the market. This is why you can't afford to get out of the market completely. My account is up over like 3% in 2 days. One of my accounts, my brokerage account, is seriously outperforming right now. The other account, the IRA account, is much more conservative and it is now underperforming. It was outperforming because of gold and precious metals, but now it's kind of switched. So one thing I am noticing is there's pockets of growth stocks that are doing well, and then there's pockets of growth stocks that are not doing so well. But one thing that just continues to smoke is financials. And I have two regional banks. I have Regions Financials, and I have a small, very small bank called Bank 7. Bank 7 is up 7.54% in 5 days and 10.6% this month. Regions is up 6.1% in 5 days and 8.3% in the last month. And I bought more shares of each of these over the last month, I think at least twice. So once again, you can't afford to miss up these deals. Also, a new purchase for me is Barclays. That's up 2.7% in the last 5 days too. So these three financials banks, they're just doing great right now. You know, the yield curve over there, basically what's going on is that the short end is falling faster than the long end. And I'll leave it at that. You know, it can get more complicated analysis, but that's good enough. So the things that have been happening is oil is falling back down. Gold is not staying up, despite the fact that the US dollar is down 9.6% year to date. I did not rush in and buy oil. I think I said on my last videos, I like Total Energies is one oil company that I like, but I'm not paying foreign transaction fees and foreign withholding. So I skipped out on that. Shell was another one I had thought about, but you know, I think oil just has farther to fall here. I think what's going to end up happening is oil is going to end up crashing at some point. So that's my personal opinion here. And I'll put up a chart over here somewhere where you can see the silver over oil, and you can see it spiking up here. I'm still dollar cost averaging out of gold. Some of you may think, well, man, why are you doing that? The dollar is going down and then the interest rates might be going down. Well, once again, I'll put up a chart over here. This chart will be of SGOL, which is the gold ETF over SPY. And you can see this thing peaks and then it lasts for like 6 months and then it collapses. So my bet is that I've already made 60 to 80% in gold with my gold ETFs over the last two years. That's good enough. I'm not going to get greedy. These ETFs are not permanent holds. They're not insurance like the physical metal. Gold can go down and stay down for 10 to 20 years and not do anything, and I don't want to be left holding the bag. I made some money the last 2 years in gold, and I won't sell all of it, but I'll sell some of it, okay? Once again, growth stocks today, Uber is doing absolutely wonderful. It was up 8-point-something% at one time. I don't know what it finished at. Another company that I have is Brainsway. It's an Israeli company. It's doing great. It's up 8.3% over the 5 days and 12% over the last month. So, you know, these certain growth stocks are looking really good. I have been buying IWY, the growth ETF, pretty heavily. In June alone, it's up like 2.5 to 3.5%. Once again, you can't afford to get out of the market completely. All these people keep talking about going to cash. I went to cash. I stayed out for a bit. It got back above the 200-day moving average, and I got back in. Not all of my account, of course. British Tobacco is up 7.54% over the last month. This is another stock that it has been... It's proven fruitful to stay in it, and I am looking forward to, I think today was the ex-dividend date. I'm looking forward to getting my big juicy dividends, which I can reinvest in something else. I'm probably going to just buy more XLG. I'm not buying more British Tobacco. I think it's, I don't know if I want to use overvalued, but you know, we're up 60-70% over the last couple months or so, quarter, whatever. So I'm not buying any more of it right now. I think there's better things. The financials are, I think, the place to be. It's just looking too good. I mean, you can go ahead and you can chart like KRE over SPY, and you can see that we're just undervalued. Material sector is just really blowing my mind right now, because there's some things like Eastman Chemicals and some materials company that seem very undervalued, but they're just not moving like financials. So it looks like financials are the place to be. And then some of these growth stocks. Lots of people are hollering overvalued AI bubble, but here's my opinion. I'm not a professional, but I think this AI stuff is, maybe it is a bubble in, a few years, but we're early. I think that this stuff is just getting started. We haven't even seen what's going to come with the AI. And of course, some of it is certainly way overvalued. But at the same time, I think going forward, you're going to find out that we're just getting started. This isn't like the tech bubble yet. I think we got a long ways to go. These PE values, they could go higher. I mean, they're just it's almost like random. Somebody says, oh, that's too high, but the market is made up of different sectors than it was 10 years ago. Different composition. I think the market can go higher from here. I think it pays to be precautious, watch the 200-day moving average, but stay invested. And if you see things turning to the downside, you can always get out. But I don't think you want to miss these awesome days like the last 2 days. I really don't. There's some turmoil in the world, and I don't want to speak too much on that, because I still think that we're being, not giving us all the information. Things are still up in the air. So we'll just have to see. Rates, who knows where they're coming in with that, if they're going to be dropping them in the next 6 months or not. But regardless of all the noise, I think you got to stay invested, because none of this stuff is really anything new. We've been here kind of sort of before, right? All right, you all take care.